And I think we are live. So if you are here with me and you are live, always drop your questions in the chat. Also good if you could literally just drop a 1 in the chat if you are live and you can hear this. Want to make sure other people can hear this. So drop a 1 if you can hear it. I'm Anton Stetner, and we are going to go over one of my favorite topics today. I love talking about market statistics. I love talking about what's happening in real estate. I've been looking at this data since 2003 here in the Seattle Metro. And the data shows you always where the market's going, what's happening with pricing, what's happening with inventory. We can see where everything is headed. And I like to share this with you about the Seattle Metro once a month and just kind of go over, here's what we're seeing in the market. As we go through this, just drop questions into the chat. I will come back, answer each one of the questions. We got about an hour together. If you want me to look at a specific city or a specific zip code, we're happy to dig into that. Also, feel free to drop your own questions in there. And as we get going, we're going to talk about rates. We're going to talk about the Fed. We're going to talk about the government shutdown and always housing, housing, housing. So let's throw some data up and start taking a look. We need to look at PS. What a cool company that does coupons, get your little cash back. But I think you really got to look at the 10-year Treasury. The 10-year Treasury, well, this is interesting. So Trump threatens to use government shutdown to cut popular Democrat programs. There's a lot right now of news that's constantly hitting that is negative or is attacking one side or the other. It doesn't really matter. A lot of it is noise. You need to look at the data to see where things is going. And like I said, I've been looking at this since 2003. We've done thousands of transactions here in the Seattle Metro. But the story is in the data. Ignore the news. Ignore what they're telling you, because when you look at the 10-year Treasury, you can see this right here. The 10-year Treasury is trending in a downward direction. The 10-year Treasury is what sets debt for mortgages. There is a spread on top of this. That's about 230 basis points. Historically, it's 180 basis points or 1.8%. And what you can see is it's basically slowly trending down. And I got asked the question this week, well, what about the Federal Reserve? They're going to drop interest rates another quarter point. Is that going to show up in mortgages? The answer is yes and no. It's going to show up first in the rumor. So the bond market reacts just like the stock market. It reacts more on this idea of buy the rumor, sell the news. And what happened is right before our last rate cut, you can see it right here, rates were really low. So we were telling all of our investors before the rate cut, all of our home buyers before the rate cut, lock now. I'm telling you before the rate cut here in October, lock before the rate cut, because it will most likely follow what we've seen in history and pop up a little bit again. Buy the rumor, sell the news. The bond market is a forward-looking indicator. The bond market is also what sets the debt. The 10-year Treasury sets the debt for auto loans, for home equity lines of credit, for construction loans, for business credit, credit cards. As this trends down, debt gets cheaper. Okay. So how many cuts are we going to get from the Federal Reserve? This is what's called the CME Fed Watch Tool. The CME Fed Watch Tool shows us what the Federal Reserve is thinking. This is the market essentially betting on where they believe the future is going. And they believe we're getting another quarter basis point cut. You can see that right there. That's almost a 95% chance. If you had a 95% chance of something happening, would you make that bet? Absolutely. This is very much a bet that you would end up making. So the October rate cut is basically baked in. There is no meeting in November. Let's look at December. December has a 79.8, basically an 80% chance. So we're going to get 50 basis points cuts by the Federal Reserve, and that should eventually translate over into mortgages. And mortgages, let's go to Mortgage News Daily. Let's look at their rates. I'm going to pop this up on the screen for you. And their rate right now is showing the 30-year fixed is sitting at 6.36. Now, this did get down to as low as about 6.125 right before the last meeting. So I'd expect this to drop just a little bit. But if we get a 50 basis point cut, the thing I need you to understand is possibly by December, possibly by January or February, rates could dip into the fives. And if you look at data from companies like Housing Wire and Altos Research, you can see that on a national level, and we can see this here in the Seattle Metro in our data too, that as rates get near 6%, what happens is the market picks up. Demand increases as debt becomes more affordable. Makes total sense. Well, as rates come under 5, expect that demand to increase. So for my real estate brokers who are hanging out with me, I expect to have a phenomenal finish to 2025. Okay. We are going to kill it in December. We are going to finish out deal season. 2, I expect, now this is for everyone, I expect the spring market right now of 2026 to outpace the spring market of 25 and to probably match or beat 2024. 2025 was a little bit slower, but I believe we're going to have a better one because I believe that based on the data sitting in front of us today, now, of course, this could all change in 2 weeks, but based on the data sitting in front of us today, rates should be in the upper 5s headed into the spring market of 2026. And so what does that mean? How do we dig through the data? All right, so we're going to start digging through the data. If you have any questions, just drop them in the chat. Drop them in the chat to say hi, just so I know someone is hanging out with me. Let's go look at the data specifically. Now that is the whole MLS. Let's go into King County. We always like to look at King County and Snohomish County as kind of our first 2 measures of data. And the reason we want to look at King County and Snohomish County, that's where the largest chunk of the population is. That's the center of our real estate universe. Seattle's the center of our real estate universe. Bellevue is kind of like epicenter number 2. And as things change, they change in rings out from there. So as you go really far out, problems start really far out and then they ripple in. But price appreciation is always the strongest at the center where there's the most demand, where there's the most jobs, where home prices are the highest. Tommy, good morning. Thank you for saying hi. And then, so let's look through the data here. So King County, we've been slightly appreciating. So we're looking at average price. Average price is up 1.3% month on month. The median is up 1.2. Now, when we're talking about average and median, I always need you to remember median is the middle. It's less affected by really high stuff and really low stuff. And average is all of them added together. When we look at it, let's go to the rolling 12 on the data. The rolling 12 is, median price is basically flat and average price is only up 2.1%. Now, when you see something like this, and you see the average price is only up 2.1% and the median price is basically flat, so 850 and just basically 1.1, that's currently below the rate of inflation. So home prices are appreciating. But if I back out inflation, home prices are completely freaking flat. Don't expect this to continue. Why? I already showed it to you. The 10-year Treasury, this is trending down. The government has talked about how they are going to, not the government, the Federal Reserve, about how they are making rate cuts. As they continue to make these rate cuts and debt gets cheaper, expect the market to appreciate faster. This is what I keep trying to explain to everyone for deal season. As demand increases, there will be less deals available. And I'm literally closing on a deal today. phenomenal. Owner financed, needs love, buying it under market, and we can buy or build a dadu on the property. It's not a home run, but it's a good base hit. And if you just simply do that over and over again in the market, you will do phenomenal. All right, back to the data. Let's drop back into the monthly. Let's look at listings. New listings is up 16.5% versus September of 2025. Let's look at it on the rolling 12, up 14.5% when you look at it on the rolling 12. Homes for sale. Wow. See, this is where, so see how there's less homes for sale? When I'm telling you the spring market is going to take this away. The debt will take away this little bit of extra inventory. I've had agents and brokers, investors ask me about, is the market slowing down? The answer is yes, it is for now. But the reality is it already stopped slowing down, and you can see this in the data. It already, the inventory is already not rising as fast, which means the market is getting ready to start heating up. This is forward-looking indicator that we're looking at right now. Pending sales, 11.5% versus the same time last year when we compare September to September, and up only 3.6% when we look at on the rolling 12. What about closed sales for King County? 7.7%. Let's look at it on the rolling 12, 5.5%. All right, this is where, this right here, this growing inventory, 3.6 months, up 24%. This is where this is where our listeners, our subscribers, you guys are with me, you gals are with me. You understand already. There are lies, damn lies, and statistics. And this one right here is a scary sounding statistic. Inventory is up 24%, but it's up from a very, very low number. And at 3.6 months of supply, this is starting to be a more normal market. And then you see that show up in the days on market. Okay. So days on market, let's look at that. Average days on market, 36 days. Right there in the spring, 22, 23, up to 36. Back in the early 2000s, 30, 40 days on market was very normal. 60 days on market was normal. What happened was, as humans, we get recency bias. We start to believe that how things are happening currently, they will just automatically continue like that forever. And so the post-COVID era with the really cheap debt got us thinking that real estate should always be selling in a few days or a few weeks, which just isn't the case. Not normal. Throw the data back up on the screen. Let's stretch this out just so you can see more. So we are getting back to 2014 levels, but we are nowhere near great financial crisis levels of inventory. Once again, expect this little extra. So expect about a month, if I had to guess, of inventory to go away this coming spring. We're going to go to percent of original list price. Percent of original list price. This is one of my favorite metrics to figure out which direction the market is headed. As we look at percent of original list price, you can see when the market gets into bidding wars and when the market is giving something up, aka deal season, aka opportunities for buyers and investors. So as we look at this data, let's drop it back into the last 3 years. You can see that the market peaked in 24 at 102%, peaked in 25 at almost 101. It was 100.8, and then peaked there in 23. But look how that's always in like the spring. So if you want to overpay, buy in the spring. And it makes sense, okay? This is my Seattle hat. It's raining outside right now, like usual. But when the cherry blossoms come out, the spring market starts here in the Seattle metro. And that sunshine, it makes us all feel better. So we go out and we start buying homes. And one of my things is talking to me. I love it. And if we want a deal, though, the deals happen in the winter. So in the winter last year, in November, December, and then January, And then right now, see how we're already dipping down? This was the market slowing down. This is going to continue. Last month was 96.9%. When I say deal season, that means the average person got 3.1% off the purchase price in King County. That is a big deal. The normal average is about 98.4. In other words, deals have been happening, and I expect deals to continue through the winter, but expect the cheap debt to then start to suck up that excess inventory. And as that little bit of excess inventory gets sucked up, expect more appreciation in 2026. All right, let's look at price per square foot. The price per square foot last month in King County was $531. It took 13 showings to go pending, and the average property only got 4.7 showings. The thing to understand when we are talking about the showings to pending is if you didn't get more than 5 showings, it's price, it's condition, it's positioning inside the market. That's it. Those are the only variables that we have. You're also starting to see cancellations rise right now. Cancellation is when the seller decides, I'm not getting my price, so I'm going to cancel the listing and then wait until next year to see what happens. I'm personally selling some of my own properties right now, and I just took 2 of them off the market. Why? I'm going to rent them and just sell them sometime next year because I'm not getting my price today. I'm a hardcore investor. To me, it's just price. I don't have an emotional reason to sell. I've also got equity. Okay, let's look at Snohomish County. And as we go through Snohomish County, let me know what areas you want to take a look at so that we can make sure that we're answering your questions just like always. Snohomish County, let's look at the median first. Woo, look at that. See? Look at that. So 745 in August to 690 in September. Sounds like deal season. 816 to 779 on the average price, down 3.7% versus the same time last year, down 8%. Now those numbers sound scary, but remember that's month over month. So the data is always choppy. Let's look at it on the rolling 12. On the rolling 12, still showing up 2.8, but see that dip right there? That dip is real, okay? That dip is also part of the seasonality, though. Let's look at the average price. The average price, $810,000, up. I got to unplug this thing because it is literally trying to drive me crazy. There we go. Up 3.6%. So Snohomish County is out appreciating King County. Now, realize that is actually just most likely due to affordability. You start to see this when rates get really high. You start to see the more affordable areas outperform some of the less affordable areas. Now, having said that, we're looking at this at a county level. Inside of cities, inside of zip codes, there are ones that definitely outperform the whole county. Last time we looked through a zip code in Bellevue, and that zip code in Bellevue was showing double-digit appreciation. So it was outperforming King County overall. So as we dig through this data, if you're a buyer, seller, or investor, realize we have to have a specific conversation about your goals, your wants, your needs, and then how the data says you should be spending your money to make the wisest financial decisions now or in 2026, because the data will always show us where things are going. Also realize when we look at data like this is a lagging indicator. We're looking at data from September. So this data is already old because a closing in December, or I said that totally wrong. A closing in September is from August or July. So it's usually 30 to 40 days before that. So even the sales price closing data has its own lagging measure to it. Let's throw the data up, make it big. New listings, rolling 12, up 10.5%. Monthly, up 11.4, very similar. See how inventory naturally goes down during the winter? It naturally goes down during the winter, but then our percent of original list price becomes the best, just like we had shown before. So 97.5, 97.6, and January 97.5. And then look, people were getting better deals. I tell you, it's deal season. 96.4, a little bit better than King County in Snohomish County. All right, we talked about new listings. Let's look at homes for sale, up 37% monthly when we compare September to September, up 39 on the rolling 12. So inventory is definitely rising. Pending sales up 5.7 month to month. Rolling 12 data, barely flat as a pancake. Okay. So once again, don't let the media scare you. We are in a very good market. Our market is outperforming the vast majority of the United States. And as the debt gets cheaper, just expect the market to heat up and move even faster. Throw the data back up. Closed sales, rolling 12, basically flat, about 10,000 units in the last 12 months in Snohomish County. 876, in September, down 6.2% versus the previous September. Days on market, 36. So look at that. Peaks in the winter, peaks in the winter, peaks in the winter. So all these peaks were in January. Lowest right there in the spring, heading into June, right there in the spring, heading into June. When should you be buying? Are you getting my theme of this one? Like the theme. Deal season. Rates are trending down. If you're going to buy something between now and January, maybe February. Buy before the spring market. If you're a seller, it's actually going to depend on your specific area and then your long-term goals and needs. And if we're moving into another property, on whether or not we should be selling today versus later. Let's look at the months of supply. Months of supply, 2.9. And we peaked and we see we've already started pulling back. So when we start talking about these percent of original list price, the inventory is already pulling back. Don't expect this to continue to trend down, because if the inventory slows down, this number will just flatline like it did previously. The price per square foot, $411 per square foot is the average here in Snohomish County. Let's look at shows to pending. The average property took 11 showings to go pending. Pending, I always forget this because I forget that sometimes all of you are not real estate professionals just like me. Shows to pending means the seller accepted an offer and now they're moving into the pending inspection status. So it took 11 showings on average in Snohomish County for the seller to get an acceptable offer. Now, they may have gotten multiple offers, but that's what it took for them to get one signed. And then the average property is only getting 4.3 showings. If we're not getting them, same thing. It's price, it's condition, it's positioning inside of the market. Couple things I want to do is I want to look at this data from just a different angle when we look at it in the year-to-date function. I got to remove that window and I've got to share a different one. Stop the sharing of that one, share the screen, share the window. There it is. Share the data. Boom. Let's make me smaller because this is now looking at it year to date. So year to date for King County. So January to September, the median price is up 2.4%. And then when we look at the average price, it's up 1.3. Similar to what the rolling 12 was telling us, but this is year to date. Another thing to be looking at here is the months of supply. Okay, 2.8. We had already talked about that. Let's look at Snohomish County real quick. Year to date, flat. I mean, 0.9, that doesn't even count. That 0.9, if you include appreciation, if you include inflation in that number, our median sales price was actually slightly negative here in Snohomish County and basically flat when you look at the average price. Next thing I want to do is I'm going to go through Pierce County and This is for the listeners, the subscribers. If you guys have questions about the market, drop it into the chat. If you have something that you want to go over specifically, drop it into the chat. But now I want to take a look at the surrounding ones. I want to go into Pierce and then possibly into Skagit or Island after that. Reshare the screen. There we go. All right, we are back up. So let's look at the sales price in Pierce County. Average up 2.5% versus same time last year. And look at that. They kind of peaked out, slowed down. The similar, but definitely very similar to King County, very similar to Snohomish County. Basically flat. Let's look at it on the rolling 12 data. Rolling 12 up 2.8 on the median, with 550 being the median price, and up 4.4% or roughly 610 on the average price. What's happening with inventory or new listings? New listings up 8.6%. Homes for sale up 23. Oh, the data is starting to look scary. Let's look at it monthly. See, it's already peaked. Okay, same thing. This data, you look at this data for 20 plus years, it does the same thing. It has a seasonality to it. And we're always trying to stack up on good opportunities in the winter and near holidays. You can see it in the data and in the list of sales price ratios over and over again. What's happening with the pending sales? 7.8%, good in September. What about the rolling 12? Up 7%, good. Closed sales. Oh, up 7%. Pierce County, 11,584 properties closed here in the last 12 months in Pierce County. Months of supply of pending, 2.9 on the rolling 12, on the monthly 3.6. Expect it to look more like 2024, so expect this top to just go away. Percent of original list price, ooh, same thing happening there. Kind of getting beat up as the market is slowing down. And this is why you've heard the Federal Reserve kind of change their tune. They were talking about inflation. Now inflation's running a little bit hot, and they're talking about labor. So their dual mandate is inflation and labor, and the labor market is cooling. And so now it's become labor over inflation, and the labor market is going to lead us to lower rates. Let's look at the price per square foot. $324 a square foot there in Pierce County. Shows depending 12. Average property only got 3.8. All right, let's go and look at Thurston, aka where our capital is located. What's going on with the median price? Up 4.7% month on month. Rolling 12 up 3.3. Oh, we're beating inflation. Good job, Thurston. And 4.8 on the average, with 540,000 being their average price, or 552 to be specific, in September. Thurston County beating the rest of us. You know, the question with that is that because of the government jobs that are there, or is that because of affordability? Could be some combination of the above. New listings up 10.7%. Once again, we've already seen the peak. We've seen that start to cool down. Homes for sale, same thing. Already seen the peak, starting to cool down. But there was 1,154 homes for sale last month in Thurston County. Pending sales up 2.8% month on month. Let's look at the rolling 12, just barely up 1.6. Let's look at the closings. Thurston County closing 3,851 transactions in the last 12 months. Let's go to months of supply. 2.8 months of supply on the rolling 12. I like the monthly. See how supply is already dropping there. Super interesting. The percent of original list price, 96% last month. Not as dramatic as a drop in Thurston. That is probably due strictly to that affordability. So more buyers qualify. Once again, watch rates. That's going to be the ticker. The price per square foot last month, $290 a square foot. The average property took in 12 showings to go pending. Unfortunately, the average listing only received 3.4. All right, if no one's going to hit me with a specific one, then I am going to keep going. I'm going to bust through Skagit. Skagit, this data, because there's not as many transactions in that county, it's very choppy. I actually like the rolling 12 data for Skagit County more because I think it's more representative. You can see we're up 5.3%. $563,000 was the median price on the rolling 12 in September 2025, and 606 on the average price, up 2.6%. So definitely beating inflation on the median, but really right about the rate of inflation on the average price. New listings up 10.8%. The homes for sale up 18%. But look how there's only 504. I mean, let's be honest with ourselves. Skagit's, I mean, it's got a lot of farmland. It's got a lot of open rural area. So you're not going to see a ton of property there. But what is happening is as the Seattle Metro is becoming so unaffordable, think of that as mostly Pierce, King, and Snohomish. You're seeing more people push into Pierce and Thurston, and then more people push north also into Skagit. Also, the buildable lands inventory is mostly taking out in King County and in Snohomish County. What that really means is, and I hate to say this, the single family home in King County and in Snohomish County is on the endangered species list. You can blame the Growth Management Act. You can blame red tape. You can blame the Puget Sound Regional Council. They are not allowing more buildable land inventory to come into our market. As they do that, they're forcing in more townhomes, more attached products, more ADUs and DADUs, more fourplexes, sixplexes, more infill. I don't like this. I want to see everyone get a single family home, little picket fence, white backyard. We currently only occupy about 4% of the land in Washington state. So it's not a land problem. This is a policy problem. This policy problem has also gone and promoted 40 years of straight just vertical growth in pricing in our area, which is starting to make homes unattainable to the middle class. I am 100% strong middle class. If we can get them into homes instead of into rentals, we have stronger communities. All right, I'm going to get off my high horse for a second and head back into the data. Pending sales. Nice job, Skagit. You're up 5%. Closed sales up 5.6, doing good. And days on market, the average, let's take off the rolling 12. Let's get the real data. 42 days was 45. Okay. Let's go to month supply of pending, 4.7. So notice how Skagit County, being a little bit more rural, is starting to get to where they are almost a buyer's market. As you hit 6 months worth of inventory, you are moving into buyer market territory. There's probably some deals inside of Skagit County. I love it. I love it. Let's go look at month supply of actually percent of original list price. Last month was 95.37. In other words, the average person got 4.7% off the price. The average price per square foot was $337. Shows depending, 8. And the average property only got 2.7 showings. You know what? I want to look at Island because I was talking with my banker yesterday. And I was specifically talking about Island, or Camano Island. So I'm going to look at Island County, and I'm going to dig into Island or Camano Island right after that, because we were talking about new construction inventory, and new construction inventory has been selling very slow out on Camano Island. And also for those of you that have been thinking or considering new construction, in my opinion, because I've done new construction also for 20 years here in the Metro, it's really some of the best deals right now because you're getting price reductions. So their price per square foot has been going down. And then the builders, in order to maintain prices, have been then creating incentives. And those incentives are everything that you can think of: upgrades to the houses, appliances, but the one I like the most is interest rate buy downs. Some of these large national builders have been offering interest rate buy downs to the point where one of my investors is going to sell one of his properties. Excuse me. He's going to move out of the property that he lives in currently. He's going to keep that one as a rental, turn around and do a cost segregation study to get a big write-off. If you don't know what that is, we'll have to talk about that in a different video. But if you don't like paying taxes, you need to figure out what bonus depreciation is. That's the moral of that story. And when he moves into this other property that's in a great school district, because of the builder rate buy down, that is a fixed product, he'll be able to put 10% down, owner occupy it, move out later, and the property will literally break even. So if he put 20% down, he'd probably be in a positive cash flow situation. And then if rates come down in the future, a new construction property could actually cash flow. Blew my mind, but I ran the numbers with him. It was legit. All right, sales price in Island County. Once again, the data is really choppy, so we got to go to the rolling 12. And last month, the median price was $565. The average price was basically $645, up 5.2%. Island County doing good. Island County beating most of us. New listings up 12%. Homes for sale up 22%. Pendings up. Close up 5.6. I'm going to go over here. That's percent of original list price. Let's break this down to monthly. Oh, look at that. Island County, definitely the best deals right now. 93.5% last month. Wow. Wow. And the average buyer in Island County got almost 7% off the price. That's a deal. 7% at a $600,000 price is $42,000. Like, let's do some math around this. That's a lot of money. Woo-wee. Okay, now let's look at Camino, because when I was talking with my lender, let's see how good Camino is doing or what's specifically happening there. Let's look at sales price. Throw this data back up. Rolling 12, Camino Island up 7.8%. Let's look at it on the monthly. Monthly up. Okay, that's median though. Let's look at average. Up. Interesting. Rolling 12 up. Then maybe it's just the new construction. All right, let's go over here to new construction and see what we're seeing. Oh my goodness. Wow. Down 15% versus last year. Holy Toledo. Median +2. Oh, we're on the rolling 12. Okay, let's go to monthly. Monthly, the data's not sharp enough. Yeah, I got to stay on the rolling 12. But I think this is what's showing. This is dramatic declines in that average price. There are deals in new construction on Camino Island right now. Wow. If you're a builder, rent it. I mean, rent it, figure out what to do with it. That's a builder's margin right there. That's their whole margin. Crazy. Not what I was expecting. The banker was right. I mean, no surprise. Bankers loan you money and reduce the risk. Their job is to know and understand these pieces of data. Okay. Wow, that kind of blows my mind. Anyway, is there anything else that anyone wants to look at today? And if you watch this on the replay, just drop a city in, a zip code. Happy to answer those questions later if you weren't able to join us on the live. But Camino Island as a whole is really doing okay, but its new construction market is exhibiting oversupply. Matter of fact, let's go look at the months of supply. It's not that bad. 4.5. But some of those builders must be getting motivated because that was clearly some prices dropping. Percent of original list price. Yeah, I mean, look at that. That's on the rolling 12. Let's look at it on the monthly. Yeah, I mean, that's down to 90 right there. Crazy data. Crazy data. All right. That is all. You know what? Yeah, that's all that I have really prepared for you today. Thank you for hanging out with me. Thank you for chatting about real estate and one of my favorite pieces of data to look at. Hit that subscribe button. Share this with someone who needs to understand what's happening in the Seattle Metro. If you got questions or comments, drop them below or reach out to us if we can help you with any of your real estate needs here in the Seattle Metro. Thank you. I'm Anton Stetner.